Shut up and sit down.
All right, everybody, welcome back to Rebel Trading Group Podcast. Today's date is August 1st. It's the first of the month, people, 2019. What is up, everybody? My name is Nathan Oliphant, and with me, as always, is the gluten-free Jason Bessing.
The gluten-free Jason Bessing. What's up, Mr. Nathan? Happy Thursday to you. Happy 1st of August.
Thursday, my dudes.
It's already August. Can you believe that shit?
Month 8.
Absolutely crazy. So let's just get the ball rolling right here, right now. Let's go. The numbers. The Dow has shed off a lot. A 600-point swing, and we closed down 280 points on the Dow fucking Jones. Down 26 points on the S&P. Down 64 on the Nasdaq. Gold finishing slightly up to 1449, and oil selling off heavily, but starting to want to rebound, sitting at 54.40.
You see that? People they took their money out of the market and put it in gold and silver.
Yeah, that's a flight to safety. And I think, I forgot a very important one. Bitcoin, cryptocurrencies. Bitcoin currently sitting at $10,400, pretty much on the dot.
Go, baby.
It's looking good for the alternate investments, the flight to safety, the risk-off investments. And let's roll right into the news, because you're going to explain why we are selling off 2 days in a row pretty heavily.
Okay, so I know this. Well, a couple reasons. One of the main reasons, there was a Fed rate cut, and people might be thinking, well, that's a good thing. That provides stimulus to the market. Lower rates means things cost less in general, or cost less interest in general. However, 45 in office didn't like that and criticized Fed Chair Trump and said we needed more of a cut.
Exactly. Investors, basically, it's not so much that the interest rate cut we knew it was going to happen, but the problem is when they talked about it, they said that this isn't the beginning of a trend. We are not going to continue to cut rates to appease the markets in any way, shape, or form. They're just trying to control inflation and make sure that we can grow our GDP. So
here's what I think. I mean, it's already priced into the market.
Mm-hmm.
The rate cut, because like when the news came out, like the market fucking went wild.
Mm-hmm.
And then just sold off. I think this is normal. So I don't know. I think there might be either a bigger kind of trend down right here into a little correction, a little small little dip, little bounce, little sell-off, like you said. But I don't think it's. I don't know. I want to stick to my hypothesis of October.
You don't think it's anything to worry about? Right. I think that's exactly what I think.
It was already priced
in the end, when I say 280 points on the Dow, well, that's really like barely over 1%. It was 1.05%. So it's really that I don't get out of bed for 1%, Nathan. Yeah. Like literally, call me when we're at like 800 plus points in a day.
That was a fun day.
Oh yeah. Do you remember that one day, January of 18? It was like a 1,700 point day in like 30 minutes.
Yeah, it was great.
Yeah, that was
something.
That was stupid. But yeah, because they decided not to announce, hey, we're going to cut rates in the future if this goes well and goes as planned.
Oh, yeah.
That's what the investors were wanting. That was the bullish news that was going to push us over the top and just throw us up. But because that is not happening, I think we're just going to step down a little bit more maybe tomorrow and then kind of turn around.
There was also a report coming out that housing has slowed for the 14th month straight. I think that's something the Fed looks at. I'm not too sure.
Oh, absolutely.
Housing sales.
That's
and
one
relative to how the economy is doing.
Absolutely, that's one of their key metrics that they follow.
Right.
That's one of their indicators, I guess, is the best way to put it. And they actually have mortgages on their balance sheet.
It's one of the indicators. It's not like one of the only things they look at. Like they don't only look at one of these things. They make analytical decisions on all of the things.
And strong housing is a backbone to American culture, American society, American economy. So if housing slows, people aren't really pumping money back into the system, and then it needs to be going somewhere else.
So what does the dollar do?
What did the dollar do? Well, the symbol is
the Fed cutting rates.
Well, in my opinion, it should have weakened it, made it cheaper.
Right,
so let's see what UUP did. Yeah. So UUP dipped down. That's the dollar ETF, which I don't really get how it just follows dollars, but whatever. Looking at the 1 month, like it ticked up, and then right after the announcement, it sold off. It was at 26.79, and now it's sitting at 26.66. So
look at
sold
that.
off, but it's not like an aggressive downward movement. Like it's really, if you pull up the 1 year or even the 5 year, like you can see some of those aggressive downward movements I'm talking about. Go to December of 16 all the way to February of 18. You're looking at about 10-15% gain or loss. I'm sorry, and that's on the U.S. dollar. So 15% on the U.S. dollar.
Which one are you looking at? Are you looking at UUP?
Yeah. So
the 1 month on UUP is up, though.
If I'm not mistaken, it gets complicated, and I'm not a currencies expert, and it's above my head, and it's above a lot of people's heads. But if I'm not mistaken, it makes the dollar cheaper when they raise interest rates, and that's what's supposed to spark the economy. The dollars become easier to obtain, and I think it's something to do with that. I don't know. But this recent activity has kind of brought me an idea of a topic for discussion today.
You're a topic of discussion today.
Oh, I always am a topic of discussion. But because we've seen this sell-off, Nathan, we've seen like some of my stocks, I think L Brands was down 7% today. Luckily, I was out way before all this happened.
Oh, really?
And I sold up at the top.
Oh, wait, hold on.
But down 7% today.
Why are you out all of a sudden? I don't get that.
Oh, because it just ran up way too much. I mean, I only had several shares. I had about 8 of them. But I got out. I
thought you were going long.
Because it just kept running up, and then it sold off. So I might look to get back into it. But anyway, my point being is a lot of my value stocks that are out there are they sold off heavily, including the markets overall. But L Brand's down 6% on the day. GE down 3.5%. Ford Motor Company down. Sorry.
Are you asking me?
No, I'm pulling it up. Down a lot today. Sorry, 2.5%. So my point being,
nothing was really well.
Not much. There were some things that went wild.
Southern Company was doing well today.
My Altria group finished.
What the hell is Southern Company doing? Are you looking at Southern Company?
No, SO.
God, they're wilding out.
Are you about it?
I want to short it, dude.
You got the nards. It looks like the beginning of a downtrend. I would give it some time. It's not volatile enough for me to want to like try to capture massive movement on. Like it doesn't move much.
It looks so cyclical though. I don't know.
Look at that 1 year uptrend. You're gonna short that, Nathan?
Yeah, I want to. I haven't done it, but I've been thinking about it for about a year.
Dude, that looks like some stock buybacks to me, bro.
You think so? That's probably what that is. That's cool to look at.
That's what that looks like to me. Just fucking strong institutional buying long term.
The graph just like, yeah.
It's a beautiful chart.
You know that Bitcoin halvening or Litecoin halvening chart that you showed me about the accessibility of the Litecoin over time?
Mm-hmm.
I kind of I thought about buybacks and stock graphs that way.
Yeah, well, they kind of shelve these shares and put them off to the side.
Yeah.
Pump up the numbers.
I don't know why I thought that relation was kind of correlated. I don't know.
Anyway, no, getting back to it all, the topic that I wanted to get to. So we see this market sell off. When everyone has that type of investor that they are, like that strict type, whether it's the high-flying day trader, swing trader, investor, whatever. But there comes a time when markets change on you. and your strategy needs to adapt. For example, I'm trying to think of the best way I can put this. For example, when we first started trading, it was in about 2016. Exactly, it was 2016. And we were in a time where if you bought it, it was probably going up. And a buying opportunity was like a 2% dip. Like, we were just in such a strong bull market that it was just like buy, 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 buy. And eventually that slowed down. So once again, so we kind of changed gears to, okay, well, maybe we need to look at long term. And if we're going to play short term, maybe we need to be more heavily levered, like options, if we really want to capture the proper amount. So during this sell-off and this kind of market shakeup that's happened over the past 48 hours, how do you think one kind of identifies when they should start to change what they're doing? Does that make sense to you?
Well, there's technical indicators. That's like one place that I've always like struggled in with the finance area is technical.
Well, my problem with technicals, while albeit like you can look at a chart and you can just call shit all day, but you never really know, right?
So technicals is like charting.
Yeah, the chart patterns.
Yeah, like following chart patterns using different chart strategies.
My problem with the technicals, though, when you find like the point, okay, Southern Company has hit $54 3 times in the past month, so I don't think it's going to go below 54. Well, a simple Trump tweet can say, fuck your technicals, and just break through. So, I heard the best analogy I've ever heard
unfair.
was think of a football field. Like, that's 100 yards by, I think, 20 or 25 yards. Like,
that's not just a Trump thing, like... So I was watching The West Wing, and they talked about like doing that, like moving the stock market with speeches and stuff like that.
Oh yeah,
and
yeah. I'm guaranteeing it happens all the time. I'm gonna fuck up the biotech industry today. I'm gonna fuck it up and bring this to Congress today. Get ready, bro. You don't think that shit happens? You fucking kidding me? You fucking kidding me? You think that's only in movies in Hollywood? No. That's every fucking day, bro. Hedge fund managers having lunch together.
Yeah.
Hey, I'm trying to unload my shit, bro. Hey, I'm looking to take some losses, so if you wanna dump them on me, I'll kick these to you. Shit like that. You kidding me?
That's insider trading.
So anyway, my going back to the football analogy. So you have those defined sidelines, those painted lines, like those don't change throughout the game. Well, when you put those kind of barriers or those sidelines on a technical chart and you kind of find that trading range, all of a sudden a Trump tweet can make your range much wider now, or it can shrink it for a certain amount of time, you know? So like those sidelines are not defined and they are movable, and that's my problem with technical analysis is there are so many outside indicators, no matter how right you are, Nathan, and we've both been victims of this, Berkshire Hathaway, TQQQ, to name a couple of them. I'll call out our shitty trades.
They're like ex-girlfriends.
Like we looked at it, we're like, dude, it's gonna happen. Like it's gonna bounce. This is it. We're gonna go up. And suddenly, what was supposed to make you $1,000 just lost you $200 quickly.
But it could have made you $1,000.
But it could have made you $1,000. That's the bitch of it, right? But no matter how strong your technical patterns look, there's just outside shit that can say, nope, sorry. Yeah, I know it double bottomed here, but
quad
trade
bottom.
War.
Don't
trade war.
Do not say it quad bottomed. It had 4 bottoms to that.
Yeah, we don't try to justify this, Nathan. You were right and you were wrong. Berkshire Hathaway.
Not to mention the quintuple top. Or sextuple top, the Dow Jones 5 years about to hit. Just do it already. Just fucking recess.
Do you think there's any other major things that, like, if something changes, that you might need to adapt to your strategy? What do you think? Like, hey,
yes,
for example,
yes,
what about a Democratic president?
Yes. Well, okay, so the only reason I think a Democratic president would have an effect on the stock market would be the change in party.
True. They're gonna try to. They're gonna work their agenda, and they're gonna try to maneuver money where their party wants to maneuver money.
The market doesn't. The market doesn't like uncertainty, and when you're changing a party, like a whole platform, for God's sakes, like we were talking earlier, that one day, that was off the line, wasn't it? Yeah, about platforms and campaigns.
Mm-hmm.
If you're gonna change a whole platform of the party to like a whole different party platform, you see what I'm saying? It's like it scares the market because it's like uncertainty because they're gonna try new things, like you said.
Mm-hmm. Like how the healthcare, we talked about this several podcasts ago. I don't remember the exact episode, but we talked about the healthcare industry getting shaken up because Dems are pushing for universal social healthcare. Like it's actually starting to come to fruition.
Crazy.
Apparently, and that would cause devastating impact to the healthcare sector.
It won't fucking pass.
It won't pass, but
what
they
if
might
it
get
passes?
They might get some things their way.
The fuck?
You know, what if they go for the Grand Slam, right? And they're like, no, absolutely not. And they're like, okay, well then, how about what if we just did this? No, try it again. Okay, well give us these. Okay, we'll let you have those. You know what I'm
saying? Did they come out with a plan to pay for it?
They kind of whittle off all the shit until
you said it was in fruition, and I feel like fruition needs like that. How are we gonna pay for it thing?
Oh, of course. I mean, when has it never just been dumped on the taxpayer's responsibility? That's the justification to pay for everything.
I'll say it. I'm tired, man. I'm just like exhausted after working like such a hard day. And then you're just gonna tax me?
Yeah, tax you 25% of your shit already. You work 3 months a year completely free.
It's gonna be more.
Yeah, absolutely. And that's not to get too political on the show, but that's just a fact about the Democratic Party. They want to raise taxes. They like doing it. It's part of their platform. Moving on.
Are we labeling ourselves as an independent?
I am a registered libertarian.
Is that what it says on your card?
Yeah, I'm a part of the Libertarian Party on my voter's registration. So I straight up, and even in that's a murky area.
That has to be a boring primary.
Oh, of course they don't win, but
well, I mean they win their primary.
I mean, I thought you meant like the primaries if they were in.
No, the primaries come first before the general.
I don't know what I was thinking of. So like
you were thinking of the general. So the government is.
So what's the difference
from the top, from the bottom,
and like the government?
I'm in the triangle. Don't worry.
That's funny. I think some other major factors are, of course, you know, like we said, interest rates. If we were not easing, and we were tightening still instead, like what if they went the other way? What if the Fed said, "Hey, guess what? We're actually going to jack up rates. Fuck your market." What if they did that? Well, it would pull some more liquidity out of the system. Stocks would have taken a dump. You know, it would have just kept the recession cycle going, and it could have pushed us into another thing. And that will for sure change your portfolio and how you need to approach it, right?
Here's my thinking. And I'm sorry to get political again. I think it's a political move to I don't even know if this would even like be passed on the same way, to counterbalance the tariffs by lowering rates.
Say that again?
So I think it's the reason they want to lower rates, or lower rates were pushed for, was to counterbalance their tariffs.
Was that said, or is this an idea of Nathan?
That's an idea.
I like it. You say, hey, we may not need to rely on the global economic system. If we just do it ourselves, we just put the Band-Aid on it ourselves. I like that thinking, Nathan.
The global economy is starting to slow down, but America is at the top of that slowdown. They're slowing down the least.
Slowing down the least. I mean, it's still happening.
It's like, that's crazy. Like, I don't know.
I like that idea because it's totally a possibility. Now, the Fed, of course, is supposed to not be political and supposed to act on their own, separate from outside factors. And I want to say, as much as I hate them, I want to say that they're pretty decent at that. Much more so today than maybe in the 70s. But that's a different story. So, that being said, I think they may be trying to counteract all this trade and global economic slowdown by pumping up our system. I like that thinking. That's a very good idea, Nathan.
That's not a bad idea. I mean, I don't know. Maybe I'm just not looking at it from a different perspective.
In my own opinion, I don't see what the big fucking problem is. Like, what do we need to lower rates for? I mean, do we really need growth? We just need sustainability. Am I ignorant? Do we need to go through the recession so that we can all change what the fuck we're doing? Like, what's going on? Do some people need to get out of their careers and get new ones? Do we need to have new innovations? What's causing the slowdown?
What if we just started working harder?
What just stops the economy from? What just stops the whole world from making money? What? Am I right?
I think there's like economic conditions and social conditions that require aid, that requires I don't know, taxing on countries.
Maybe there needs to be a few wars. I'm not a fan of war by any means, but you know,
that's crazy.
Maybe
Venezuela's weren't we like in like a war like up to 2007?
Yeah,
that's crazy.
A good war though.
That's crazy. And then like what happened in like 2008?
So amongst this volatility, do you see this as a time to go short? Maybe for the month of August. Or do you think the downtrend will continue? Or do you think this is buying opportunity for your long positions?
No. Be careful buying. I don't know. Can I say that? Be careful buying long right now?
Oh, absolutely. You think, how about secret option number 3? Go to cash. You don't have to go short. You don't have to go long.
I was going to say that earlier in the episode.
Oh.
Yeah, just start getting just a huge cash position.
Maybe 25%.
Maybe like 50, like half cash.
Half cash,
that's
really?
Huge. No.
Amongst this one rate cut, I feel like it's not enough. Like it's not enough of a catalyst to say this could be a moment that we need to brace for.
I would honestly just start.
It's a tough call.
If I didn't see any buying opportunities, I would just hoard cash.
I'm averaging down on some of my core holdings.
Because what do you do? Like if you're not like buying.
I mean, if you're not buying, then your money's just sitting there.
Okay, so you just stop.
That is a trade itself. That is a trade itself.
What I'm saying is, like, if you're not putting money in, like, that's like a main key factor in, what do you call that, accruing interest.
Yes. And especially if you're going to hold it for a whole month, that might change how you end on the year. You know?
Saving more, just keep putting it in. And if you still don't see buying opportunities, I don't know. What do you do? What do you do if you don't see buying opportunities, but you still want to put money in? Your cash stack just keeps going higher and higher. What do you do?
Well, with buying opportunities, I would say more specifically to your core holdings. I don't think this is a time to start loading up on small caps or international stocks. And apparently not commodity stocks after today, because energy just got shit on. I got like 6 alerts on my phone from different apps saying energy is just getting pummeled.
Southern Company.
Yeah. Exxon, XLE.
ExxonMobil, like, fucking refinery just blew up in Texas.
Oh, yeah, I heard about that. Yeah, they had to evacuate one, right?
That's like, dude, fucking oil's going to get rocked. Going to get fucking sky high.
Oh, man. Interesting shit, man. I still like them as a potential buying opportunity. If they can sell off like a good 5% from this incident, plus, I might.
Excuse me.
They're at the top of my watch list right now. I'm just itching to pull that trigger. How about you?
They pay a good dividend.
There, yeah, that's a solid. That's a solid core holding, dude. Solid. It's on a down
Ticker
tear for
symbol
about
XOM.
past 3 years
Ticker
or so. It's been on a down tear.
XOM. ExxonMobil. 2.5% today. Mamma mia. 72. What the heck? Oh my God! Look at that 1 year.
Yeah.
You know what I just say? Paying the dividend. Look at that. Just paying the dividend.
I remember this thing in the 80s, about 84 to 87 a share.
About 5% of the dividend.
Oh, man.
17.24 PE ratio. So that means, why don't you run us through what PE means again? The price to equity ratio.
Price to earnings.
The OB, the Rebel Trading Group price to equity ratio.
Oh shit, they're pre-market tomorrow. That's going to be a fun one. I'm going to go ahead and say that's what I'm watching because I'm very curious how they do. If they can if they sell off pretty solid, I'm happy. I'm going to enter a position. I'm going to enter a small position. Wow.
Rex Tillerson was the Secretary of State.
But if you do look at the 5-year, that's still a strong downtrend, dude. You look at that 5-year, like maybe it's not the time. That's a strong 5-year down, man.
Rex Tillerson, the CEO of ExxonMobil, was the Secretary of State.
That fucking scares me. That
oil hungry. God bless him.
All right,
dude.
Do
you think that's why he got kicked out? Because like he brought up like invade Saudi, and then Trump was like, "Get the hell out of my office."
Instantly, he was like, "Well, we're gonna have to go to war soon."
Like, here's your resignation letter. I've been holding it for months now since you took office.
Crazy. Well, I was probably just mutually agreed, like, yeah, maybe
conflicts
this
of interest.
The best idea for either of us.
Yeah.
Hey, you gave it a shot, though.
All right, let's wrap this up, man.
Yeah. I'm not gonna lie. I'm gonna totally hijack that entire session. I'm watching Exxon. How about you, bro?
I'm watching Southern Company. I'm gonna say screw it because I've been watching that for a bit.
For the shorting op?
Yes.
I don't hate it, dude. I mean, I don't want to say I don't hate it, but I don't like it. What about a good old straddle here?
On Southern, I can't promise that much move. I don't know.
I mean, it's the fact that it's a utility. If it sells off, it's gonna sell off 1.5%. You're gonna have to deal. You're gonna have to deal in multiple contracts here.
Please no, not again.
And yep, again, Nathan, you have done this to yourself, Nathan.
It knows when I'm like fucking with options and does the
absolutely.
opposite of what my fucking contract is supposed to do.
You know what we gotta do, man? We gotta plan out a trade where I go long and you go short.
Yes.
And we'll just see what happens. I'll cover your loss, you cover my loss. Yay? Nay?
Well, you'll cover your loss until like we max out on the more profitable position.
Yeah. Like we'll cut the loser and let the winner run.
Like if we know it's just gotta move. Like yeah, we know. We'll sell you our secrets.
Market just explodes. Nathan did this and Jason did this. What? What?
It's in the Wall Street Journal.
All right. Well, if you have any questions, comments, concerns, suggestions, insults, ideas, corrections.
Insults. Let me hear your insults.
Let us know. Rebel Trading Group. Oh, sorry.
Yeah,
go.
No, you're good. You're good. Go ahead.
Oh, sorry. Rebel Trading Group with 2 G's. That's Rebel Trading Group at gmail.com. We are on SoundCloud. We are on iTunes. We are on YouTube, where we have a full archive of all of our videos for free for you forever.
Forever.
And we are on Stock Twits. We just out here. Get to us. If you hate it, let me know. If you love it, let me know. If you want us to break anything down, break anything up, just holler at us. We'd be more than happy. We love your feedback. So, Nathan.
Thanks for joining us.
Happy August. It's already here. Thanks for joining us.
Oh, God. Here we go.
Maybe we can do this again Monday, Tuesday-ish.
Okay.
All right, man. Well, I love you. And, I guess happy trading.
Happy trading.
Romantic, isn't it? Shut up and sit down.